It's May the 10th, and all the headlines are saying housing bubble. People are paying too much for houses. Prices are way too high. Well, I'm going to address those subjects and give you my opinion of what I think the housing market is doing this year for 2022. So if that's of interest, stick around. I have all the details coming right up.
Don't buy real estate if you experience allergic reactions to happiness, satisfaction, pride, fulfillment, contentment. Stop buying real estate if you don't like community, a sea of belonging, a diversified portfolio. Buying real estate may cause you to shop at hardware stores, furniture stores, and design centers. See your realtor immediately if you experience any of these symptoms.
Hello, it's MarkBoehmig here at Michael Saunders & Company in Lakewood Ranch, and in this channel we cover all the areas around Lakewood Ranch from Sarasota up to Bradenton and from Anna Maria down to Siesta Key. So if you get value out of these videos, just click that little subscribe button, ding the little bell. Every time we put on a new video, you'll be notified. So I made some notes for today's video because I want to talk about the housing bubble and what people predict we're in as far as a housing bubble. Some are experts, a lot of different opinions on the subject. So let me start out by saying what we would define a housing bubble as being. So you don't have a housing bubble if you have an abundance of homeowners willing to sell at a loss. And we do not have an abundance of homeowners willing to sell their house at a loss. These people are not upside down and underwater in their homes. So that's one of the reasons I don't think that we're actually in a housing bubble. Are the prices inflated? Probably so. How much? I can't really say. That's hard to determine because only hindsight looking back on this in several years will be able to tell us exactly where we were at this point in time. So housing, I think, has found a new floor. We're at a new level. And if you compare it to something like Apple stock, let's just say you bought Apple stock and it was $200 a share, and then it goes to $300 a share, and it stays at $300 per share, and then it starts incrementing up. Well, that $300 would be their new floor. Well, houses have done the same thing. House prices have risen. Over the last year in Lakewood Ranch, our house prices rose about 26%. So from there, that might be a new floor, and then anything else that goes above that would be an increase over that floor. So the question is how much is it going to go up this year? So industry experts say anywhere from about 3.5% to 7%, some of them 8 and 9%. But as you can see here from this chart, different reporting groups give a little bit different opinion of what the house prices are going to do for going up this year. But I want to add some real insight to why the housing market is where it is. It's all a supply and demand factor. We have a much higher demand here than we have for supply. And the builders can only build so many houses at a time in all of these different communities. Now, I have a lot of comments on this YouTube channel about Lakewood Ranch being overbuilt. But if you look at the national statistics, we're about 5 million houses short. So where are those houses going to be built? They have to be spread out all over the United States. While Lakewood Ranch has their share of new builds, it's going to be moving further out east from our area in Lakewood Ranch. And to do that, we have to have new construction to supply the demand that we have right now. We think that the price appreciation will slow much more this year, so prices are not going to rise as fast as they have in previous years. And interest rates are one way that the Fed has to control how fast things move up or down. So just think what would happen if the rates went back to 3%. The demand would be much more than what we've had now. And I can feel the market starting to shift. And if you look at this video right here, you'll see where I talked about the market shifting and the 6 indicators that we see for a market shift. But the Fed's increasing the interest rate does have an effect on people's buying power. So therefore, the demand is going to slow down some, therefore giving us a little bit of relief. And therefore, the prices won't be increasing quite as fast. Now, as long as we have this imbalance between supply and demand, the demand outweighing the supply, prices will remain at this level. So let me give you for example. Let's just say that you bought a house here 2 years ago and you paid $500,000 and now it's worth $700,000, but you're still living in the house. Well, if that price of $700,000 drops to $650,000, did you lose money? No, because you haven't sold the house to reap the rewards. If you sold it at $650,000, you're still making a $150,000 price gain. So people get confused about, oh my God, the prices are going to drop and they're going to fall. Well, they probably will come down some or level out and not increase very much. But the fact that you've had that house for a while and that the price appreciation has gone up doesn't mean that you've lost money. It's the same with that Apple stock. If you bought it at 200 and now it's 400 and it drops to 350 and you sell it, you've still made that difference. You haven't lost anything, it's just that the price of the stock has come down. Now, another thing that as rates increase, and 2 years ago we were about 3.11, now we're at about 5.11, and as rates start to increase, that's going to reduce the pressure on the people here buying houses for the demand, so the demand is going to somewhat decrease. Well, that's a good thing because we couldn't fill all the demand, and that's going to help keep the prices a little bit more stable for this year. So if you look at this article right here, it says, bottom line, if you're thinking of selling to move up, you shouldn't wait for prices to fall. Experts say prices will continue to appreciate this year. That means if you're ready, buying your next home before prices climb further may be the most financial sense. So to quote Mark Zandi, chief economist at Moody's, doesn't foresee a housing bust over the coming year. However, he says overhauled housing markets could see prices fall 5 to 10% over the next 12 months, while national home price growth flatlines to zero. So remember back to the person that bought at say 500 and now it's worth 700. If they priced it, and a lot of people are doing this, they're pricing that home at $750 to see if the market will take it. And you see the house come on at $750, then it drops to $725, and maybe it drops to $700. Then they get the interest and they get a contract on the home. So just because someone is listing their house at a certain price doesn't mean that it's going to sell there. And we are seeing some price reductions, more so than what we have seen in the past, because the sellers are a little bit overzealous in what they're trying to get for their properties. So I hope you found this video helpful. I'm going to put my contact in the link description below so that if you have any questions or you're planning on coming to the Lakewood Ranch area, I'd be glad to help you out. I'll also put a contact link there for the Lakewood Ranch Information Guide, which outlines all the new home communities that we have in the area, and we'd be glad to put one of those in the mail. Now, one other thing that we try and keep track of is what are the home builders doing as far as coming to market for new homes? Are they taking bids? Are they putting you on a wait list? So we have created a spreadsheet that covers those items. That spreadsheet is kind of difficult to keep up with, so you'll just have to bear with us. But I'll put a separate link for the spreadsheet for the new home builds in the Lakewood Ranch area down in the description below, and you can also click on that and fill that out, and we'll give you access to that as well. Mark Boehmig, Michael Saunders and Company.